how can a CIS subcontractor get a bigger home? That's exactly what I'm going to be telling you in this video. So if you're watching this video and you probably work in the construction industry, or you're the parent or partner of somebody who does, so I get it. You need to find out what a CIS mortgage actually is. So make sure you watch to the end so you can find out why CIS workers have a massive advantage when it comes to getting a mortgage. So first of all, let me debunk a common misconception. You should understand that a CIS mortgage is not really a thing. It's not a special mortgage scheme or a mortgage product designed only for construction workers. In fact, what it is a far more advantageous way that some mortgage lenders can calculate mortgage affordability. These are what I call subby-friendly mortgage lenders. So whereas the traditional way of working out how much a self-employed person can borrow would be to take an average of the profit from the last 2 years' tax returns, well, the problem with this method is that the average profit in every single scenario is going to be a smaller figure than your pre-tax, pre-expense CIS income. So a smaller income will give a smaller mortgage, which means maybe a flat instead of a house, or a 2-bed home when you really need a 4-bed home. So by the way, anyone who is just a regular self-employed person, they're going to have this issue, or they mysteriously have hardly any expenses in the last 2 years just before buying a home, but end up with a massive tax bill. So the way that I solve this issue for self-employed construction workers is to focus my mortgage advice on subby-friendly lenders. And these are mortgage lenders that look at your CIS payslips and calculate the average gross income, and that's the pre-tax income for all those that skip maths lesson. Some of these lenders will work out mortgage affordability from your last 3 months, which is really good if you've been smashing in the hours recently. And then some of these lenders, they're going to look at the last 6 months or even 12 months, which is perfect if your recent income is poor because maybe you've just come back from touring Australia for a month. But one thing they all have in common is that none of them will ask to see your self-employed tax calculations. Basically, lenders who like CIS workers treat them in almost the same way as an employed person, and they allow them to borrow far more than any other type of self-employed worker. So if you're a brickie or a carpenter or an electrician and you've been waggling your tax returns instead of your CIS payslips in front of your mortgage broker or bank, then I'm going to be the bearer of bad news. You've been doing it all wrong all along. So let me know in the comments if you've paid through the CIS scheme and you've been told that you need your last 2 years' accounts just to get a mortgage, or maybe you've been successful in getting a mortgage using your CIS payslips.